Alibaba. Like many China stocks, it's been crushed, down 27% this year as China's taking desperate measures to try to prop up stocks.
Look at this chart. Since December 2020, Alibaba and the Hang Seng have moved in tandem. Back then, the Chinese government launched that antitrust investigation into Alibaba, introducing a wild card for Baba and the market at large, telling investors essentially that Beijing could and would interfere at any time. No longer are investors as excited about that so-called BAT-X group, China's answer to our FANG, made up of Baidu, Alibaba, Tencent, and Xiaomi. All eyes have shifted to this new class of Chinese tech giants.
How much this new class of winners is dictated by the politics and the regulatory environment in China, too, when you realize that there was a crackdown on some of those names that were the prior leaders.
Exactly. In short, very dictated, right? Because what the Chinese government tried to do a few years ago was crack down on the dominance of that old guard, of the Alibabas and the Tencent. So inadvertently or advertently, it has created this new class, but that also raises the question, could they crack down on this new batch if they become too dominant? And that is always the risk with Chinese stocks.
Welcome back, everyone, to the Audacious Money Witch channel, where we talk about investing and trading and a lot of fun things. Baba stock rallying into earning as Alibaba-backed startup is winning the AI race against Meta AI Llama 2. Alibaba stock is trading at Hong Kong Hang Seng Index as well as in the New York Stock Exchange. So whatever happens in Hong Kong market will definitely affect Baba stock price. If you saw my last video, you will know that the Hang Seng Index just reached a double bottom. Now it's bouncing it off the lows for 2 days straight.
Chinese stocks had their best day in years on Tuesday, but even that may prove short-lived.
However, it's still down way more than the mainland Shanghai Composite Index. Why is this the case? A Baba shareholder might wonder that fact. Well, it's because it's no longer one country, two systems for Hong Kong. In recent years, Beijing has cracked down on Hong Kong's freedoms, stoking mass protests in the city and drawing international criticism. Beijing imposed a national security law in 2020 that gave it broad new powers to punish critics and silence dissenters, which has fundamentally altered life for Hong Kongers. Hong Kong was a gateway for Western investment that wanted to invest in mainland China. Ever since CCP has taken over Hong Kong, the capital has been leaving as companies pull out of China. So now the Hang Seng Index is affected by US macro and the Fed policy and the Chinese central government's policy. The macroeconomic issue, and that is to do with interest rates. US interest rates are high at 5.25%, and that is like a giant magnet that sucks in international capital. So if you're a global fund manager, it's easier for you to make money by putting money in the US stock market than it is in the Hong Kong. That being said, Hong Kong stock market right now is the cheapest in Asia in terms of forward-looking price-earnings ratio, and it is the one of the cheapest in the world. So it will only be a matter of time before money comes back. For money to come back, you need some confidence. You need big change. You need big reason for money to be put here. And right now, there are a few things which are on the horizon, which are clouding that outlook. One is the domestic economy. The economy in Hong Kong, the economy in mainland China that is not really giving international capital, and as well as local capital, the confidence to put money into the stock market now. If you're, average person running a business or a highly salaried person in mainland China, job prospects are a little bit iffy right now. Pay raises and bonuses are questionable. There are not many reasons for you to put money in the stock market, so the people are really looking for a boost of confidence. So they look to the government and the economy for signs that whatever language that the mainland economy is hitting the rock bottom and there's a U-turn around the corner. If you think the Chinese government would not orchestrate the most insane stock rally in history, following the absolute shit show of the past few years during the Dragon Year, you've obviously never met anyone from mainland China, much less worked with one. Zodiac is everything. They will literally wait for years to get married just to say they did it in a Dragon Year. What? Business applications soar. People make risky investments. They build houses. Every single person in China believes Dragon Year is the time to go big. Asians are literally some of the most superstitious people on earth. They are particularly sensitive about numbers. Drink some rice wine and play cards with some Asians. You'll learn a lot. Back to China, it's one of the most ethnically homogeneous countries on earth. Chinese people are far more similar to each other than Americans are. Their culture is rich, but there is a much larger degree of shared values and beliefs. Alibaba is scheduled to report results for its fiscal third quarter on Wednesday. Here is what you need to know. Net profit for the quarter ended December 31st is expected at $5.15 billion. That would be down from a bottom line of $6.5 billion a year ago and up from $3.8 billion in the fiscal second quarter. Revenue is expected at $36.34 billion, up from $34.45 billion a year earlier. What to watch? Growth trend. Alibaba's revenue growth has slowed in recent quarters from more than 30% in its heyday. Investors will be watching the company's revenue numbers to gauge how well it navigates a slowing economy and fierce competition. Citi analysts said they expect a 6.3% rise in third quarter revenue, with the softer direct sales trend and a cloud revenue growth offset by the continued upbeat momentum of Alibaba's international e-commerce business. Restructuring. Chinese internet giant Alibaba Group is looking to sell a number of consumer sector assets, including grocery business, Freshippo, and retailer RT Mart. The sale plan comes as Alibaba, under Chairman Zhou Tai and newly appointed Chief Executive Eddie Wu, has shifted focus back to its core profitable e-commerce business model, and they want to invest in more AI, cloud computing, and also overseas expansion. These offline businesses do require a huge amount of effort and resources, and it's proven quite difficult to actually integrate with their core business, which is the online commerce business. Overseas expansion. Alibaba's international commerce business has been one of its fastest growing units in the past few quarters. The unit reported 53% revenue growth in the September quarter, compared with the company's overall 9% revenue growth. International growth momentum should stay robust, driven by AliExpress and Trendloi. But losses could expand on increased sales and marketing in the latest quarter and growing contribution from the consignment model. Chinese artificial intelligence AI company 01.AI. which means 01 everything and alludes to a passage from the Taoist text, Tao Te Ching. It was backed by the e-commerce giant Alibaba Group, is positioning itself to be a leader in the AI space under the leadership of prominent venture capitalist Kao-Fu Lee, the mastermind behind established Google and Microsoft Corp in China. 01.ai is challenging the norms with its open source model Yi and has rapidly climbed the ranks on the Hugging Face leaderboard, showcasing the power of its large language models. It recently received $200 million in funding from Alibaba Cloud and Lee's venture firm Sinovation Ventures, and soared to a valuation of $1 billion within just 8 months. 01.ai's Yi 34B, with its superior performance and cost effectiveness, it's positioned as a crucial player in addressing market demand for large-scale language models, especially in China, where OpenAI and Google are restricted. 01.ai's is based on the Transformer architecture first developed by Google researchers in 2017. Yi 34B outperforms much larger models like Meta's Llama 2 70B and Falcon 180B. Also, Yi 34B's size can support applications cost effectively, thereby enabling developers to build fantastic projects. Whatever the extent to which Yi 34B borrows from Llama 2, the Chinese model functions very differently because of the data it has been fed. Yi shares Llama's architecture, but its training is completely different and significantly better, says Eric Hartford, an AI researcher at Abacus AI who follows open source AI products. Lee's advocacy for open source extends beyond 01.ai. An issue with one or a few companies having all the most power and dominating the models is that it creates tremendous inequality. He highlights the potential adverse effects on researchers, students, entrepreneurs, and hobbyists, stressing the role of open source in fostering innovation. On the contrary, the pioneer in leading the American AI initiative, Microsoft backed OpenAI, initially aimed to position itself as an open source model, but later shifted to a closed source strategy with a focus on profitability. Closed source models may hinder collaboration, limit the scrutiny of AI systems, and contribute to the concentration of power in the hands of a few organizations. China is not ahead of the US in LLM, but there's no doubt China can build better applications than American developers, mostly because of the phenomenal mobile internet ecosystem that was built over the last 12 years or so, according to Lee. If he's right, 01.ai's technology and applications built on top of it will put Chinese technology at the heart of the next phase of the tech industry. So Alibaba is top 4 in cloud computing, probably just behind Google Cloud. Its AI opportunity is out there to compete with Meta AI, which is being valued over $1 trillion today. And you can get Alibaba for less than $200 billion. That's why I'm bullish in Baba stock in 2024.